Investment property costs. Hey, what's going on, everybody? It's Jeff the Mortgage Pro. I hope you're doing really great today. We're going to talk about investment properties. This is my favorite topic to talk about. These are my favorite loans to do. I love doing investment properties, whether it's a conventional investment property or using a DSCR loan for investment property. It's right in my wheelhouse and the type of clients that I'm looking for that I want to work with. But oftentimes, one of the biggest questions that I get are, what are the costs? Before I get into it, do me a huge favor. If you could click on the like button down below, that helps me get my video message out to as many people as I can. And then if you really like these videos, please go ahead and subscribe. I'd love to have you part of my ecosystem, and hopefully you can view more of my videos as they come out. And that really helps me, and I really appreciate your support on that. Okay, let's talk about some costs associated with investment property loans. So these are mostly associated with the rate in the beginning here that we're going to talk about. So rates for investment properties, whether you're doing a conventional loan or a DSCR type of a loan, are always going to be a little bit higher than what you would have if you were going to buy an owner-occupied primary residence with 20% down. So, you're definitely going to have a little bit higher in rate. I would say anywhere from, 0.5% to maybe 1.5% higher. It totally depends on your credit profile. There's many things that go into that, but in general, just expect a higher cost for investment property loans. Again, whether it be a DSCR or a conventional loan or a jumbo loan or a bank statement loan or anything like that. Okay. The reserves that you need to have are higher on a investment property. So whether you're using a conventional loan or a DSCR loan, you're always going to need reserves. In fact, on conventional loans, you're probably going to need a minimum of 6 months worth of reserves, whereas on DSCR, you may need it just as little as 3 months worth of reserves. But again, the risk factor is built into the rate, so the rates are a little bit higher, and the reserves are required because, like, what happens if you can't make a payment? Do you have the ability to, maybe your renter didn't make a payment for the month? Do you have the ability to make the payment yourself? That's why reserves are required for investment properties. But what is a reserve? It's a 1 month worth of principal, interest, tax, and insurance monthly payment. And then that would be multiplied by the minimum amount of months that you would need for reserves. Now, this can be in savings or checking, or it can be in 401ks or IRAs or stocks or bonds, or all sorts of different somewhat liquid type of investments can be used as reserves. So don't panic if you don't have the money in cash. You can definitely use lots of different ideas for reserves for conventional or DSCR investment properties. There's a prepayment penalty involved on one of these. The conventional loans do not have a prepayment penalty, so that might be a benefit that you use that type of an option. But in order to qualify for a conventional loan, you typically have to have a job or you have to be working. Okay? You can be self-employed, you can have a hourly salary, or you can have an hourly wage or a salaried wage for conventional properties. But at the same time, if you don't have that, you have to do what's called a DSCR loan. So DSCR loans are the ones that have prepayment penalties on them because they're a business purpose loan. They're allowed to have a prepayment penalty, whereas a conventional loan is not allowed to have a prepayment penalty. So prepayment penalties can be anywhere from no prepayment penalty all the way to 5 years. 5-year prepay would be probably the lower end of the rate spectrum on the DSCR loans. And then if you were to do a no prepay, it's going to be on the higher end of the rate spectrum for DSCR refis. Discount points are always going to be associated with investment property loans. Now, if you've ever bought a property that's your primary residence, you probably didn't even know what points were. I don't even think that your loan officer probably explained to you what discount points are. But when you buy investment property, they always come with cost. And discount points are put on the loan just because they're a little bit riskier for an investor or a lender, I should say, and that makes it so it's a little bit harder the lender takes more risk with conventional loans that are investment properties and with DSCR loans that are investment properties. So they're always going to come with some sort of a cost. So I would say anywhere from 1 to maybe even up to 4 points, depending on the loan amount that you're doing with the investment property. So if you have a lower loan amount, maybe it's in the $100,000 range or $80,000 range, and you're going with a conventional loan, you're probably going to have probably 2 or 3, maybe even up to 4 points associated with something like that. If you're $500,000 or up to $1 million, maybe 1 discount point is going to be associated with these types of investment property loans. So just know that thgoing to come with a little bit more cost up front when you get an investment property loan. It is always the case. I rarely do you ever see pricing that's, not going to have any extra costs with it when you're doing DSCR stuff. There's admin fees associated with this for the, for me right now, the admin fee is $6.95, and that's the fee that goes to my brokerage that I work for. There's processing fees associated with that. There's a team that I use that helps me out, and they help with all the paperwork on these types of investor loans, whether it's a DSCR or conventional. That's usually in the $500 range. There's underwriting fees, because whenever we go to a different lender, they're going to be the ones that charge their own fee, because they need to get paid as well for doing these loans for you. So they're going to be anywhere from probably $1,000, maybe up to $2,000. I don't think that they go more than $2,000. I haven't seen many that go that high, but that's usually in general the range of the cost that's going to cost you anywhere from $1,000 to $2,000 in underwriting fees. You're going to have appraisal costs with these investment property loans. Oftentimes we have to do what's called a rental survey when we're doing conventional or DSCR loans. And that rental survey is going to determine what the market rent is for that property. So maybe we don't know, maybe you're buying a single family residence that's not currently a rental. We don't know what the rental income is. So the appraiser is going to determine what the rental income is through that rental survey. That's going to be roughly $150 or so. And then the appraisal cost is going to be anywhere from maybe $500 to $900, depending on the size of the property. If you're buying a really expensive property, maybe it's $2 million, your appraisal is probably going to be about $1,500. So, there's definitely a range or a fluctuation in there, but you can count on probably around $650, maybe $700 for an appraisal cost when you're doing loans for investment properties. And then lastly, you're going to have title, escrow / attorney fees. And now these are going to be standard. These are just like if you were going to do any type of loan, there's a third party that's going to handle the transaction, especially on the purchase side of stuff, even on the refinance side of stuff. We still use title and escrow or attorneys to be able to handle that for us. And just know that there's going to be a couple $1,000s worth of cost. And again, those people need to make their money too, so they have their own separate charges. And there's things that go along with those title and escrow fees as well. And those attorneys that, again, they need to make their own money as well. So they have another cost that's added to the transaction. If you really think about it, there's a lot of people that are involved in a mortgage transaction. You have a lender, you have a loan officer, you have an appraiser, you have realtors, you have, attorneys, you have title and escrow companies, you have HOAs sometimes. There's all sorts of people that are involved in a real estate transaction, and all those people are going to get paid. And that's why, I think it's helpful, and hopefully you get a good idea after watching this that, I want to try to break down some of the costs that are associated with buying investment property going forward. So if you have any questions at all about this, if you want to buy investment property, if you want to refinance investment property, let me know. I'd love to be the one that helps you out. I'm going to put my calendar link down below, and please click on that. Let's schedule an appointment. Let's learn more about what you're trying to do, and let's see if I can help. Have a great day, guys. Thanks for watching, and I'll see you on the next show. Bye.